Hello traders. I've been trading for a while now and I understand how difficult it is to stay consistent in market, right? But with price action, that is, understanding what the price has made in the past and understanding at what key level we are playing currently, we are more likely to predict what is going to happen next. That is the future, right? And of course, price action needs no introduction, and that's how important price action is. So, in today's video, we will be talking about 21 trading strategies, like you've already seen in the thumbnail, all based on price action. So, these strategies are something that you get to spot on a regular basis and something that you can rely on. For each strategy that we're going to cover today, we'll get into details like the entry related queries you might have and the logic related part. We already have 15 plus screens to be shared in this video, so let's get started. This is me, Harshini. You're watching me on Tradit. Let's begin. In the first strategy here, we are able to notice that price is taking this area as a good support, right? Because you can see every time the price is coming to this support zone, it is taking that area as a good support and it is bouncing back, or it is spending time around this area, but it has never been able to break this zone so far, right? And the second thing that you will be able to see is we have a hammer here. So by explanation, you guys would be knowing it's nothing but a longer lower wick and a small body. So what's even more important is to understand where hammer is being formed. If you're just taking hammer and trading, you will be getting n number of trades. If you just see a hammer in the same example, you can see we have a hammer here. We have another hammer somewhere around this area. We have a hammer here. So there are n number of places you can figure out, you can spot hammer. Doesn't mean anything at all. Only if you find hammer, that is candlestick, in any key levels like support, resistance, or main price action, guys, only then you will be able to combine these two. Candlestick is something that you cannot trade alone, but you have to combine this with another main strategy or main price action, and only then you will be able to take a trade, right? So in this case, our entry would be triggered if another candle closes above the hammer here, and the stop loss for this trade is going to be below the zone, and the target for this trade is going to be the top of this trend line. If you are connecting all the swing highs here, you would be getting a trend line, and your target for this trade is going to be the swing high, so that is where you would be booking your profits. And you can see this is what has happened. Exactly at the resistance area or the trend line top, it has been taken as a good rejection, and from there the price tried breaking the trend line, but it was never able to close as a strong candle, and it took rejection and again it started coming down. So this would be the right area for you to book your profits. If you're taking a call based on support, the resistance area or the previous swing high will be the place where you book your profits. Yeah. So in the next example, for the same strategy that we are going to see, we have another area of resistance here, right, with 1 and 2 touches, and we have a base trend line here. So in the previous example, we had n number of touches at the support. We had almost 5 touches in the past. So we were confidently being able to take a trade at the 6th hammer formation. But in this example, right, it is just touch 2. So will you be able to take a trade in this kind of setups? In order to answer for that, what you can do is, this is 1 day time frame. You can switch to smaller time frame. In this case, I'm going to 4 hours. And here, if you're connecting all the swing highs, you can see that we have a trend line here. And not just that, we also have a box-like pattern here. Inside that box-like pattern, you can see there are one red, one green, like alternative candles all the way. It is just played around in this area, right? So what this conveys is the sellers who have tried to push the price so low at this point, they're still trying to break the zone, and every time they're breaking it, you can see a rejection candle. You can see the buyers are pushing the price up. So price here is getting accumulated, and once the breakout happens, you would enter. So on what conditions are we entering? We have hammer, we have a good area of support. Not just that, we have a trend line, and we have this box like pattern. So on a breakout of this trend line, you would be entering, and the stop loss for this trade is going to be below the trend line and not below the zone, because see, previously we entered just based on the candlestick and the close by area, but here in this example we are entering based on the breakout. We are entering based on the trend line here. So our stop loss will be below the trend line and our target for this trade will be at this resistance here. So this is how it has worked. So just imagine the candle that came was a very big one, right? You have missed this trade and you're almost at this level at the top, that is 4,230, and you've missed all this move. So in this case, will you be taking a trade here? Is it fair for you to take a trade here? No, because even if you're taking a trade here, the stop loss that you're going to keep is going to be below the trend line, which is a huge one. Your resistance is close, that is your target which you're going to book is very close, and this trade would not even be giving you 1:1 ratio. So in that cases, what you can do is you can simply avoid the trades like this. But in order to make this setup itself work, you can get into even smaller time frame. Like here we are on a 4-hour time frame, so you can get into 1-hour time frame and see if there's a breakout candle, and if there is one, you can enter right at the breakout candle and place the stop loss below the trend line. So in that case, you will be able to catch the move, and then you can book your profits as well at the resistance area. So that is how you trade a hammer. And in the next strategy that we are going to see, the first thing we are able to see is we have an area of resistance here, right? And along with that, we are able to see a shooting star candle here. Shooting star is nothing but a longer upper wick with a small body. And this is being formed near a resistance. And before this formation of candle has been happened here, you can see previously the price came up. The buyers pushed the price up till here. And at this point exactly, the buyers tried to break this zone and go up, but they were not able to, and they came down, right? They closed below the resistance itself, indicating there is a kind of selling that's coming into the play. So in order for you to take a trade, this just conveys as one thing, but you cannot initiate a trade based on this. So what you can do is you can wait for another candle to close below this shooting star, and then you can enter a trade. So here it is, guys. There are 3 ways to enter a trade. The one is anticipating trade. That is, before even the confirmation happens or before even the breakout happens, you're anticipating that this is what is going to happen and you're taking a trade upfront. So that is one way of entering. It again has its pros and cons. Your stop loss is going to be less. It has a different perspective for that. Again, if you see, the second type will be the breakout. So here, if you're connecting the trend line here, all these swing lows, we have an active trend line here, right? So rather than entering at this point, you can even enter at the breakout of the trend line. That is type 2 how you can enter. And then the third one is going to be retest. So everyone know that whenever a breakout happens, in most of the cases, the retest will also happen, and then the price will start coming down. So you can either anticipate the trade early itself and enter with a very low risk. You can enter at the breakout, or you can even enter at the retest. So based on the price action and based on risk and reward, you can decide on which type of trade you would be wanting to take a trade. So here in this example, we have a trend line, and the break of this trend line you would be entering. Your stop loss is going to be above the trend line here, and the target is again the base of this triangle. So exactly the price came up to this level and it made a doji candle almost at this area, so you can book your profits here. So you would be exiting at this base of the support here, and you can see that again price has rallied up to the trend line, right? It is again retesting this area. So what you can do is see if it is a good setup. Your stop loss is going to be very less for this. It will be above the trend line. So you can enter here, and the stop loss is going to be above the trend line, right? So again, in the next example for shooting star, we are able to see there is a pattern. We are connecting all these swing highs, swing lows, and we have a pattern here. But in order to look for a setup, this is a weekly time frame. We are going to get into smaller time frames like 1 day, and we can see we have a shooting star at the top, right? Like I said, how you will be entering the trade in this case is you will wait for another candle to confirm, and at this red candle you can enter keeping a stop loss above the trend line. And your target for this trade would be the previous swing low, and this is where you will book your profit. So like I said, you can keep 2 targets, target 1 and target 2, or you can even trail your stop loss when you feel the price is having the strength to break that area. Okay, in this example, we are able to see it is the same example that we saw earlier, and here it has support area here and it has a resistance area here. And you can see at the support there is a hammer formation, and at the top we have a shooting star formation. So candlestick alone doesn't make any sense at all, but if it is being combined with main price action, it is a best thing to do, because the probability of the trade winning is high because you're combining one or two things. So yeah guys, that is it. And the next strategy we have, you can see we have a base here, right? And we also have a resistance at the top. So the next strategy is going to be evening star. So this is a very good reversal candlestick pattern which is being formed at the resistance area like we've seen earlier. But the formation of this is going to be a green candle followed by a doji or a pause candle, and then a good reversal candle. So if these candles are being formed at a resistance area again, it is an indication that the price is coming down, right? So you can enter at the red candle here. Your stop loss is going to be above this zone around 940, and then your target for this, okay, the first target is going to be the zone in between here. There is a hidden zone, okay. If you're able to see, we have a zone here with multiple supports. You can see support, support, support. Again here also it is support, support, and then it turned to resistance, resistance. So this is a hidden level we have. So you can keep that area as your target 1, and if that is breaking, you can keep the next base as your target 2, and that is how you would be entering. So this is evening star. And if you just looking to the left of the screen, we have another evening star at this top. So will you be taking an entry here? See, just because it has made a evening star at this point, we were able to look back and say, okay, this is where the price is rejected from, and this can be connected, and this is a good area of resistance. This is the second time it happened, and we can say that more likely the price can come down. But at the first time when it happens, there is nothing but just evening star. There is no area of resistance or nothing that you can draw. So in these kind of setups, what you can do is you can wait for a better trade. Like we spoke earlier, if we are combining 1 or 2 or 3 strong price action, it would give us more winning trades, right? Our job here is to not look for 100 trades, but whatever trade we are taking, it has to have a high probability chances of going up. If you're just taking based on evening star, the probability is low. But when you're combining it with 1 or 2 things, the probability of the thing winning is high. And always for every trade, we have a strict stop loss in place. So when the candle is going up, you're not going to sit and wait, right? Your stop loss will be hit, and that is where you will be exiting your trade from. So that is it guys. And the next example, again we see we have an evening star here. There's a green candle followed by a doji candle, and then a reversal candle, right? And we have a very strong area of resistance here if you're checking on a weekly time frame, and above this would be the place where we can book a stop loss, okay. And in order to set a target here, I'm not going to keep this swing low or this swing low, because if you're connecting all these swings, we have an active trend line here. So what you can do is you can first book your profits here, and if this zone is being broke, you can re-enter again, and you can also trail your stop loss if it is breaking that level. So that is how you would trade a evening star. And now we will see one example for Morningstar as well. In this example, we have a zone at top, right? 1, 2, 3, 4, 4 times rejection, and we have a bottom base support here. And not just that, we have another trend line here connecting the swings high, and we have another trend line connecting all the base. So at this base point, you can see there is a morning star. After such a good down move at the base almost, you can see the exhaustion happening. You can see one red candle, pause candle, then green. So not just there is morning star, but also we have the trend lines base along with support and candlestick. So you will be entering right at this candle, and if the breakout happens, your stop loss will be below the trend line, right? So any which ways you would be exiting at cost in these kind of setups. So you can enter right at this candle, and you can book your profits at the next high, and on a retest you can enter again, or you can even trail your stop loss. And also if you see at the top almost here, we have another pattern like this. One green candle and then pause, and this red candle again breaking out this pattern. So you can enter on a short trade here, and the previous swing again will be the target for you to book your profits, right? So that's how you trade morning star and an evening star. We'll see the last example for the same. We have a trend line connecting all these swing lows, right? And we have an area of resistance here. So the price took this area as a resistance, and then the price broke this area. It went up. So every time a resistance is being broke, it is going to act as a support in most of the cases. So it went up and came back again, and at the support level, you can see we have a morning star, right? We have candlestick pattern along with support and along with trend line. So these are like three conditions we have in order to take a trade. So you can enter right at this green candle. The stop loss will be below the trend line, and the previous high would be your place to book your first profit, or you can even trail your stop loss based on the move. So we have another evening star here. So will you be entering a trade here? No, right? Because like we discussed earlier, this is the first time that has went up and it has given us a evening star. So just with this one thing, we won't be entering a trade because there is no much conviction, like there's no much pattern, no trend lines or no resistance area. So we won't be entering trade like this, but we will be looking for setups like this to get better conviction. In the next strategy, yeah, we're able to see an important level here, right? Why it has acted as a support multiple times. It has acted as a support, and then once the price broke the support, you can see it went for a retest, it came down, and then again it broke this area of resistance, right? So if, like I said earlier, every time a resistance is breaking, it is next going to act as a support, right? See, at this area we have a bullish engulfing candle. That is one red candle completely being engulfed by another good green candle at the support area. So now if we are connecting all the swing highs, we have a trend line here. But in order to take a trade, right, with whatever capital you have, how much ever quantity that you will be able to take, you're first going to check the risk for your trade, because the stop loss that we are going to place here is going to be below the zone, right? There is a good green candle along with the zone. So with whatever capital and how much of a quantity you have, you can quickly calculate and see how much the risk is going to be for the particular trade. If it is 10,000 or 25,000, and only if you feel like, okay, I'm okay to risk this capital for this kind of setup, only then you will be entering a trade. So for every entries that we have seen in the past, upfront you will be just looking what risk you're taking a trade, and only based on that you will decide to either enter the trade or not. You can ignore it, is up to you based on the risk reward that says. So this is how it has gone. In order to book profits in this case, like we said, it would be the previous swing high, and from there if that previous swing high is also breaking, you can trail your stop loss. If you are not sure how to trail your stop loss, we will learn that in the upcoming videos. So again, in the next example, we are able to see the price fell very well, making lower lows and lower highs at this point, and then it rallied up really well. Almost 10 to 12 candles it has been just green, and at the top, right, there's a green candle followed by a very good red candle completely being engulfed by the previous one. So here your entry would be at this red candle, and your stop loss is going to be above the trend line. Like I said earlier, because this is index, you can upfront look into how much risk that you're putting into a trade, and only if the risk is okay with your capital size, you can look for that trade. And in this cases, because it is indices, I would be booking profits somewhere at these levels, and if that level is breaking, I can even trail my stop loss. So that's how you would take trades. So this is how it is worked. Yeah. So the next strategy, we have an key level here, right? Resistance, and then it turned to support. And also we have a triangle pattern here. This is a pattern that you can spot on a regular basis. This is something that happens very frequently, and it is easy to identify these patterns as well. So this is a neutral pattern. That is, you cannot say it has to break either on top or down. So whichever side the triangle is breaking out, that will be the place for you to enter. That is, in this case, if it is breaking the base, you will be on a short trade and you will be booking your profits on the low levels. And if it is breaking at the upper trend line, you will be entering there, setting your target as the above areas. So in order to take a trade here, you will wait for a candle. Yeah, you would be entering at this green candle here, and like I said, you will be entering on a lower time frame, not based on one day. If you're a person who is just doing intraday setups, you can look into smaller time frames. But if you're someone who's doing swings, you can enter at 1 hour time frame. So you will be entering at the 1 hour time frame here. Your stop loss is going to be below the trend line here. And talking about the targets for this trade, it will be from this area, that is 250 to 204. So this length would be the area where you book your profits, right? And from there, like I said, if it is going further higher, you can trade your stop loss, you can reduce your quantity, you can book 50%. It's up to you based on the price action. Yeah. In the second example, you can see we have a trend line connecting all these swings, right? And you can see how well it is respecting it because it is having multiple number of touches. So the more number of touches it has, the more weaker it gets. It doesn't get stronger based on the touch, but the more number of touches it has, the more likely it is about to break the pattern. So your entry for this trade will be the breakdown of this. You will be entering here, the stop loss will be above the trend line, and the target will be the high from this point to the base here. So that would be the place where you book your profit, and that is approximately near the previous swing low. Right, in the next strategy, we are able to see the price has slowly been raising up, right? It has slowly been making higher highs and higher lows, and it has a trend line here, and it also has a trend line at top. So at the top, you're able to see it has almost made an equal high, right? It didn't have a very good move. So if you see this swing, it was this high, and the next swing made again like 20-25 points more, and the next swing made again 30 points more, but the next swing almost is losing its momentum. So this is the first indication that okay, the price here is getting, I mean, the bulls who have taken the price up are slowly getting exhausted at this point. But does that mean that you will be entering here? No, you will wait for a confirmation, you will wait for the breakout, you will be entering on the breakout candle, and the target for this trade is going to be the previous swing low, that is around 724 levels, right? And the stop loss is going to be above the trend line. If your stop loss is being hit by some chance, even after combining multiple things, if your stop loss is being hit, that is something that's fair, that is something that happens in market regularly. So you can quit that trade, you can book your loss and look for a better setup, right? So this is how it is work. You will be booking your profit somewhere around this area. Guys, before you continue with the next slide, if you're liking the content so far, please take a moment and hit like. And because this is our very first video on YouTube, do let us know what topics you want us to cover in the upcoming videos. Thank you for watching. We see we have an falling wedge here. We can see that the price has been making lower lows and lower highs. We have a good area of resistance at the top, this green thing here. You can even extend. So here at the breakout of this green candle, you will be entering. Your stop loss is going to be below the trend line. The target for this trade here is going to be this previous high, that is at 2930, right? If this area is breaking, you can enter again, or you can even trail your stop loss. So this is what has happened. Now you are able to see there is another red candle here, right? So after you enter, there was a red candle which came inside the trend line. So will your stop loss be hit at this point? No, right? Because the closing or the body is something that you have to consider. If the candle is closing inside the trend line, that can be considered as your stop loss hit. But if it is just coming for a retest and if it is closing above, there is still a slight chance that it is going to go up, right? These are some stop loss hunt moves that happen, but in that cases you can just hold on tight and you can wait until the price closes below this triangle in order to book your stop loss, right? Like we said, this would be the target, and once the price went up, you can even book your profits. In this one example, the prices went really well, but in the next example, if I'm holding on to the trade expecting the price to go up till the next resistance, that is not going to happen, right? So we will be booking our profits here and there, and then like I said, you have multiple options to trail, to book 50. You have a lot of options. Based on that, you can also decide what is best to do. Okay, in the next strategy, we are able to see we have an area of support here, we have an area of resistance, we have a pattern like cup, and this pattern is handle. So like we discussed earlier, there are three ways in which you can enter: the breakout of handle, right? The breakout of the resistance, which is a confirmation, and also on a retest. So again, it is up to you to decide based on price action which works the best for you. So the target for this trade would be the height of this, that is from the base, the support, to the height, the resistance. This height would be the place where you book your profits, right? In the next strategy that we are going to see, it is on a weekly time frame. We can see how strong the prices rallied up, right? You can see every swing or every up move is very strong, and almost at the top we can see a equal high. But double top is the most confusing pattern to enter, because there are a lot of fake moves that you can find if you're especially trading double top, because every time the price is top, right? Forget about all these candle formations here, but if you're just taking this candle here, and once the price came down, you would be in a mind that this is most likely a double top, and at the high, once the price is going to this area again, you will be taking a short. So there are chances that you will be failing n number of times, but in order to avoid these kind of false breakouts or false trades, what you can do is, rather than anticipation trade, like I said, entering early, you can wait for the neckline breakout. That is what confirms us this is a double top, right? So you can enter at this red candle here, and the target for this trade will be the length from here, that is almost 720 to 620. So this 100 points will be your place where you book your profits. You can enter on the breakout, you can book your profits somewhere here, or you can even enter on the retest. Yeah. Okay, so again in this example, if you see, we have a double bottom, we have a W like pattern at the base. The price has really fell very sharp, and at the base you can see it has made a lower high at this point. So it doesn't mean you can enter right at this place. Like I said, this also is a weekly time frame, so you can enter on the breakout. You can switch to smaller time frame like day and wait for a daily candle to close above the neckline, and then your entry will be triggered, and then this move, this length would be the place where you can book your profits. And if you feel the price is even more stronger and it has the potential to go up, then you can trail your stop loss based on the price action. Okay, the next strategy that we're going to see also is similar to what we've seen earlier. Here also you can see we have almost three touches at the top. You can see the price has been very well played, making higher highs and higher lows, and at top it's made triple top, right? This also you will be entering only on a breakout candle. So just imagine if you've entered right here thinking that it is a double top, what happens is it came down, it was never able to break this neckline, it played, it spent some time here, and again it went up, right? So you would be holding on to this trade for these many number of weeks. This is on a weekly time frame. So in order to avoid trades like this, especially for double top and triple top, you can wait for the break of a neckline. So all these reversal patterns that you see, it is better to wait for the neckline and then enter, right? So you will be entering at the breakout of this zone, and the length of this top will be the place where you book your profits, right? We've been continuing the same thing again and again. That's completely fine. That is how the topic sinks in well with you, I hope. So in the next strategy, we are able to see the price has rallied up really well. It has been a strong move up, and almost at the top we can see there is a left shoulder, right, and there's another head here, and the right shoulder here we have a neckline at the base, right? So if you see, this is not how head and shoulder is being formed. You cannot expect textbook version of head and shoulder to be formed, but this is how you will be able to get your right shoulder. Most of the times will be smaller than the left shoulder, and that's completely fine. Also, I forgot to talk about something here in the double top as well. So you cannot expect the price to make a equal high all the times. The second high can always be lower, right? But that's completely fine. That is also an acceptable double top and double bottom. Coming back to head and shoulder, so you will be entering on a breakout candle, and the length of this head will be your place where you book your profits, right? Okay, so now here it has come down. Okay, it has broke, so you would be entering hopefully on a hourly chart, and then you can see it didn't give us that move, but again it went for a retest, right? But as your stop loss hit, if you're extending this neckline here, you would know it is still active, right? So you can still hold on to that trade unless and until the neckline is being broke and the stop loss is being hit. How much ever the move happens, how much ever green candles, red candles you see, that doesn't matter. You have a strict stop loss and target in mind. We're not taking trades just based on news or anything like that. We have proper price action talking here. So based on that, you can hold on to either target or stop loss, and that is how you can avoid all the emotions that's happening in the market. Whenever there's a green candle, your heartbeat will be high, then the red candle. In order to avoid all these kind of chaos, you have a clear plan in your head and you can hold on to that, right? Okay, in the next strategy, we can see we have a left shoulder, head, right shoulder. Along with that, we have a trend line. So previously we just had a head and shoulder pattern here, but in order to make the head and shoulder pattern itself more effective one, you can combine trend line along with this pattern. Likewise, in this case, you can see the breakout not just has the neckline breakout but also a trend line breakout. So the probability of this trade working in our favor is going to be high, right? So you can enter at the breakout on a 1 hour basis. Your stop loss will be below the right shoulder here, and the target is going to be the height of the head. So that is where you will be booking your profits. So in this next example, we are able to see a pole here, and along with the pole, we have a flag-like pattern here with these trend lines, right? So this is a pattern that is a continuation pattern. So prior to this flag, whatever which side the move is, that is what is more likely to happen, or that is in which side the pattern breakout will happen. So prior to this trend, you can see it had a very good up move, right? So more likely the price is going to break the trend line on the upside, and you can expect the price to go up because this is a continuation pattern. This is just a pause. This flag you're seeing here is just a pause, and more likely the pattern will break out on the upside. So your entry would be at the breakout of this pattern. The stop loss is going to be below the trend line here, and then the target is 50% of this pole will be your target 1, and the remaining 50% will be your target 2. Okay, in the next example, we are able to see there is a pole here and there is a flag here connecting these swing lows. And like I said earlier, prior to this flag, we are able to see a good down move. So more likely the price will continue on the same direction and this base will be breaking out, right? And like I said, 50% of this pole will be your target 1 and the rest 50 will be your target 2. In the next strategy that we are going to cover, you can see we have a trend line here connecting these low here, right? And along with that, we have an important area of support because here it was resistance, and then once the resistance was broke, it started acting and playing around this area, turning to support. So every time a resistance is being broke, you guys know it will act as a support. And once this support is being broke, along with that, we also have a triangle or a range bound market here. And once that broke out, again there is a range bound market here. And then once this pattern broke out, it went up, right? So what you can do is at touch 3, we have multiple entries here as well. You have trend line base, you have another trend lines base here, we have support, and along with that we have a bullish candle here. So you will be entering at this point, your stop loss is going to be very minimum, and you can hold on. These kind of setups will be best for swing trades. And the next example that we're going to see also is something similar. We have a trend line here, and every time the price is coming back to the trend line, it will act as a very good area of support. So if you are able to find any other pattern or any other candlestick, then it gives us more conviction that the price is more likely to go up. In that cases, you will be entering on the candlestick basis. Your stop loss will be below the trend line and you can trail your stop loss as far as it goes up, right? Okay, the last strategy that we have for today is RSI divergence. Before even we get started, let me give you an idea of what this thing is and how we can use it. RSI is nothing but a momentum indicator. Okay, you are not going to take any trade based on RSI, but this is an exit strategy. Just imagine you're a long-term holder or an investor. Okay, the only problem investors have is that not knowing where the top is. They won't be aware of, is it the top already, or should I be booking my profits? I'm almost made so much of ROI, but can I book my profits here? That would be the concern for most investors. So in that case, what you can do is, you can see the price here. This is the same example that we've covered earlier. It is made a double top, right? So this is the first top, and next we have another top here, and this is the neckline we have, right? But in RSI, if you see, okay, in order to add the indicator here, you can just go to trading view. You have a section called as indicator. You can just type in RSI and you can add it directly here. And we have the area here is 70.30. Okay, so now if you see, this is the high the price made, right? And also in the RSI, it is the same. But if you see here, it is made a equal high, right? But in the RSI here, it is made a lower high, which is screaming to us that whatever you're seeing in the price is not what's happening, but on the backstage, the buyers are slowly losing their momentum, and anytime soon, the price can start coming down, or it can turn from uptrend to downtrend. So that is what RSI is conveying us. It conveys us the momentum. It is saying us the buyers who have taken the price so high and made a new top are almost drained up. So this is the point where you can book your profits. So at this top almost, you will be able to see that okay, the RSI is showing a negative divergence. So you can exit right at this point, and that is how you can book your profits at the high. So does that mean you will be entering a trade right here based on RSI? You won't be taking any trade. RSI is an exit strategy. So you, even if you're exiting your trade here, you can wait for the neckline to break and then enter a trade. Why I'm insisting this is because every time you take a trade only based on RSI, more likely the price will be playing around in the same area, or it can even go further up, or you can even be stuck in that trade for 1 or 2 or 3 months. But if you're a long-term holder, or like 2 years, 3 years, if you're ready to hold the stock, that's a different thing, that you can even take a trade based on price action. But if you're an intraday trader, or if you're a swing trader, you cannot enter based on RSI. I hope that thing was clear for you. The next example, you can see the price has made a W-like pattern at the base, right? It has made a lower low, and the trend line is slightly facing downwards. But on the RSI, if you see, it has made a higher low. It is called as a bullish divergence again. And here the price is, RSI is screaming to us that what you're seeing on the price is not true, but somewhere slowly the buyers are gaining the power. They're slowly coming into the play. That is what RSI is screaming to us. So again, you won't be entering here, but you can enter on the breakout candle, breakout of the neckline, right? Again, in the next example, we have a head and shoulder example again. This would be our left shoulder, head, and right shoulder. And if you see in the RSI, right, it has made a trend line facing downwards. It's been making lower lows and lower highs all the way from the left shoulder. That is, the price after left shoulder here, it has made a new high. At least it has made an equal high, we can take it, right? But here in the price, if you see, it has made a lower high. And again, the price has gone up, but here it has made even more lower. That is, if you see from left shoulder here to the right shoulder here, it is almost in the same area. But in the RSI, you can see it has been making a lower low, lower high thing. So it is saying us that, Hare Baba, you're still on the trade, but here in the back end, something else is happening. Slowly the sellers are coming and the momentum is being lost. So exit out from the trade is what RSI is conveying us. And you will be exiting at the top, and after the breakout, you can enter on a short position, right? Okay, the last example for the day. And here, if you see at the top almost, we have a same trend line, right? Almost it has touched the same area thrice, and then it has come down. But in RSI, it has made a trend line facing downwards. So this is an indication that the prices slowly, the bulls who have taken the price up are exhausted, they are drained, and anytime soon the sellers might come in. So that would be the place where you book your profits, and you can enter on the breakout of the neckline. Okay guys, that is it for this video. We have covered 21 trading strategies. I hope it was simple and clear for you guys. Until I catch you in the next video, trade safe with a very proper risk management. Thank you for watching.